Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. Here at The Real Money Show, we're here to empower listeners with the analysis of the precious metals market, and we're going to help uncover the trends and opportunities often ignored by the legacy media. We hope to educate and inspire those who are prioritizing real wealth measured in ounces, not depreciating fiat currencies, a big topic for today's show. We also foster a community that values financial resilience, independence, and freedom. My name is Jeremy Wiseman. Jerry Correa, how are you doing, my friend?
Feeling good, Jeremy. Very
Good.
excited.
Good. So a lot happened this week. First, any comments on Chrystia Freeland quitting / getting fired?
Yeah, I mean, it was time to go. We're seeing a major shift, a lot of X's and a lot of these people's faces these days, from World Economic Forum elites just stepping down or getting fired. But this is a good step in the right direction for Canada. We got to get her out of the way, get some accountability, get some people who actually know numbers and understand finance to communicate how deep in a hole Canada is. Once we know how bad it is, then we have to plan accordingly.
Yeah, but people are waking up, and the pressure is definitely on, and the dominoes are falling. So it is ultimately a good thing that we're seeing all of this happen. Now, we also had the Fed drop interest rates by a whole quarter point, but for some reason, the market completely tanked on that news. We'll get a little bit into that. We also saw some news with El Salvador with Bitcoin. Very interesting to see that. Very interesting to see the crypto community reaction to it. Because ultimately it's a fiat currency loan for a country that claims to be super maxis when it comes to cryptocurrencies. Mm-hmm. What else have you been watching throughout the week? I know we've had some other information, more central bank buying. There was information about India miswriting how much gold that they were actually importing. I loved Vince Lancy. He put out something saying they forgot to curry the one.
That's right.
Some people didn't like that sense of humor.
There's been a lot of that happening these days. I've just been following the outflows out of the Comex, so that's going to be brought up in the show in a little bit, and understanding the implications on how that will impact the entire financial, the outlook and the space going forward. Silver is the corrupt financial community's Achilles heel, and silver will be at the forefront in correcting all of the wrongs.
And if you want to get some physical silver, all you have to do is you can go to our e-store at guildhallpreciousmetals.com. You can get gold, silver, platinum, competitive prices. Whether you're accumulating or gifting, we've got you covered. Now, the markets for gold and silver also pulled back this week. We could definitely go down a rabbit hole on that. It does not seem that we've had that pullback happening in precious metals for a little while now. It looks like that there are forces out there that really don't want to see silver end the year in the $30 range. Let's push gold down. In the face of all of these central banks buying, I think it's important to note Rick Rule's comment that less than 1% of the retailing public are in the physical gold and silver market. And if that were to revert to the mean, which I think is 2%, that would have massive implications for where the prices are headed. But what did you make, Jerry? I know you've seen it all before. What did you make of the prices of gold and silver pulling back with the rest of the markets, which I think erased something like $1.5 trillion?
Oh, it was just a wild mess in reaction to the Federal Reserve. It was all anticipated. The 25 basis point cut happened, so they're at 4.5 right now. That was anticipated, but it's always about how we translate the speech afterwards, the FOMC meeting. During that meeting, Powell said a few things that raised some eyebrows. Among them, he says, we can now be more cautious in reducing the policy rate. So we analyze the dot plots and what are the pace. What is going to be the pace of the rate cuts going forward? And he is somewhat indicating that they're going to be slowing down, that we're going to keep maintaining higher interest rates, or we need to be firm on interest rates because of the inflation that's rearing its ugly head once again. But come on, let's be real, get real. Inflation wasn't going down. The one thing that was going down was just their number, the CPI number hitting around 2% here in Canada, and they're showing a CPI number that's going down. He also mentioned that the projections for policy rates are higher for next year, consistent with higher inflation. And another one that he mentioned that really caught the Bitcoin community off guard was that he's not going to be interested in rewriting the rules or the law books to include Bitcoin as a bank reserve for the United States. So Bitcoin sold off on that. So it was a big mess. But the one thing that I'm watching is the rising bond yields as a result of this, because a hawkish Federal Reserve will see a strong dollar. Yes, the U.S. dollar hit I think a 5-year high. On the flip side, Loonie fell to a 5-year low, but the 10-year Treasury yield leaped to 4.5% as the Fed signals that caution on future rate cuts. This is spelling huge trouble for the banking sector. I talked about it last week on the show. I'm going to try to get into that again, about the bonds, about the upcoming potential bond implosion.
And what is that? What would that implicate if there's a bond implosion? I mean, in other words, there's already a stock market pullback. Again, there's been a loss of, probably more than $1.5 trillion at this point off the bottom lines of portfolios. So who cares about the bond market at this point?
No, we have to be careful with the bond market. You see, the banking sector totally relies on the bond market. This situation is really highlighting how fragile the global financial system is. We're seeing bond prices in China collapsing, but rising bond yields triggered by their rate cuts are straining the banking system, the banking sector like never before. The rate cuts have inadvertently fueled expectations of more inflation, and it's causing, this is it, the bond collateral values to drop. So the bond prices are dropping, and the collateral that is backing the bonds is dropping, right? So the value, the collateral is becoming worthless. It's weakening the U.S. banking system's integrity and the ability for loans, and this is going to dry up liquidity, and this can definitely lead to a systemic crisis.
Okay, so if the collateral is becoming worth less and demand for it is going down, you need to come up with more collateral. How are they going to do that?
They already tried. They did this in August. They reduced the reserve requirements. Are they going to do it again? I don't think so. I mean, they may try, but this is the very value. What is actually backing these bonds? We're seeing real estate, property, financial assets, securities, investments. You got even receivables coming into the country. So you have asset-backed securities, the great and famous mortgage-backed securities that are backing these bonds. Oh, really? Where are we finding the value to back the all-important U.S. bond market? Judy Shelton offered her solution in her recent book, As Good as Gold. She recommends a gold-backed bond, and this would be the solution, but we have to go through the mess first. So we have to understand we got to go through the pain. Certain things have to die, just like a seed. The seed must die before it grows into a flourishing oak.
Well, we'll get into the narrative of that in the next segment. But basically, what you have is the need for liquidity. Do you think we're headed into a situation where the Fed is going to keep lowering rates and start printing?
Well, I liken what Peter Schiff commented just after the rate cuts and the bloodshed that happened in the market yesterday. He wrote, Powell just pulled the rate rug out from under the stock market. Not only will a recession rear its head in 2025, but so too will a bear market in both stocks and bonds appear. As inflation also heads higher, the Fed will not just cut rates, but it'll cut rates more than projected, and they will also launch rounds of QE as well. The money printing is around the corner. I think they're just trying to show face, Jeremy. I think they're, just a secure, balancing act between, managing inflation. But like I said before, if you really wanted to adjust inflation down, just change your numbers. You do that all the time with your fake CPI numbers. You adjusted the way that you calculate inflation since the 80s. John Williams Shadow Stats, highly recommend that data. We get that data all the time. In real world inflation is around 12%, and even higher now for Canadians with our loonie down the tube.
And at the end of the day, right now, even with gold and silver experiencing the pullback along with the markets, which we've seen before in the past, silver is up 33% year over year in Canadian dollars. Gold is up just shy of 40% year over year in Canadian dollars. It is performing as a hedge against inflation. We are the show that told everyone to be prepared for inflation and have gold and silver in your portfolio. It has done exactly what you needed it to do. You need it now because it's only going to get worse from here. And if the Fed starts to print to infinity, watch out where the gold and silver prices go. No wonder they're trying to suppress the prices to keep people out of those markets. They want it for themselves. They can't steal from you through inflation if you've taken your fiat currencies and put it into a hard asset. You need to have physical gold and silver in your portfolio, and you can do so in a registered account. You can hold gold, silver, physically allocated, segregated, go to the vault, personally audit your holdings. This is ultimately the best vehicle for your retirement in terms of holding an actual asset in your portfolio, something that cannot and has never dropped to zero. That number, 18778-SILVER, the website, guildhallwealth.com. RRSP season is around the corner, and don't forget the TFSA limit for 2025 is going up by another $7,000. Plus, we can help set up a first home savings account for your kids, 18 years and older. Help get them out of the house sooner. Let's get that account started, and the limit for that in 2025 is going to be $8,000. If you're an existing customer with our regular who wants to have an RSP account and you have product in the depository, ask us about securing a RSP loan against the physical gold and silver. We'll talk to you about that. And don't forget that we are now starting the promo, Get Your Free Gold. Go to getyourfreegold.com and you can get up to 10 grams of free gold.
Free?
I said free. Free gold in your RSP registered accounts with Guildhall. Again, we've got you covered. We'll walk you through how to open the account, transfer your account from an existing portfolio that's probably not doing so well. This is the time to convert over to precious metals and secure your wealth with hard assets.
Yes.
The number, 18778-SILVER, and the website, guildhallwealth.com. Jerry, we were discussing in the last segment, and I don't want to go too far, but you mentioned blowing the system up. Is this a leave Trump holding the bag? He just talked about getting rid of the debt ceiling altogether, which I would have thought that would have been crazy bullish on inflation when you have the incoming president saying, guys, let's just get rid of this debt ceiling, print, baby. Instead, like drill, baby, drill. Let's print, baby, print. They'll cut out the fat using Doge, but then they're going to print a ton of money in the meantime as well. So it's a little bit of this, a little bit of that. What's this destroying the system that you're talking about?
A lot of things are being revealed. And the way I operate here, this is just my gut feeling at this point, obviously following the trends as a contrarian and looking at things in between the lines and reading the tea leaves. You're also seeing a huge bill that was passed by Mike Johnson yesterday that included some crazy stuff, funding, labs in the U.S. and labs all over here. Things are being revealed at the perfect timing for a new president to come in. Donald Trump will be coming in January, but a lot of things are being set up for him, I believe, in my opinion, to right the wrongs. Back in 2016, He was ultra low rates. That's the type of policy he likes. For whatever reason, the media today, the legacy media, wants to say that he will have a higher interest rates. He had Andrew Jackson on the wall. If you guys don't know, Andrew Jackson killed the Federal Reserve twice, and he has a mandate.
They tried to assassinate him.
And they
for
also,
that.
but you got to go the right way. You got to go the right way around to avoid assassination attempts, and that this is the real stuff. But what I do believe is happening is this is how you do it. You got to put the pedal to the metal. You got to increase that M2. Get the Federal Reserve being the focus, and the focus right now is on the reserves of the United States. What is good quality reserves? And as the bond and the yields are rising and the bonds are collapsing, the bond prices are showing their true value, which is nothing. What is backing these bonds? Solutions are there and they're on tap. We talked about them before with the Gold Standard Restoration Act, with states moving towards making gold and silver currency usable and use that reserve. And what's so important about a reserve, it has to perform during times of crises. And it must perform in terms of being fully liquid and decoupled from a crazy derivatives bust financial system. And that's what we're heading into. But in order for this to transition properly, things have to implode. So I do believe that we're going to see that this is probably an essential part of transition from one system to another, so that they can voluntarily bring in that bill. Do we have something here tabled? Does anyone have a solution? And they'll just bring that bill back up to the table and pass it very quickly and easily.
You're talking about a gold-backed bond.
That could potentially be the solution. Yeah, I believe that will work.
Well, we know that this was put out by Scottsdale Mint on X. Central banks are loading up on gold like it's going out of style. China alone grabbed 55 tons in October. Goldman Sachs now saying we could see $3,000 gold in 2025. The gold rush is real. Obviously, gold brings a certain amount of credibility. It is a tier one asset. It is something that can be used as collateral and to create loans. I was chuckling last night watching the news come across the feed about El Salvador, that they took a massive IMF loan.
Okay. Massive.
So this is the country that was pure Bitcoin, hodler. Is that what they call it?
Yep.
And the strings attached to this IMF loan is that they had to make Bitcoin optional. And I'm reading this, I'm saying, so it was not optional, is what you're saying. You're saying it was mandatory before. So using Bitcoin was something that seemed to be, in many respects, mandatory up until this IMF loan. And for the people who were pro-Bitcoin in this country, and I'm thinking specifically about people like Max Kaiser, who I think lives there, they tried to off it as though it was a good thing. Like it was a win. And I'm not sure how, if you're a Bitcoin maxi taking a massive loan with a strings attached entity like the IMF for a fiat currency loan is somehow a win for Bitcoin. I just don't see it. I see it that clearly El Salvador needed money and they needed fiat money. And I don't know why. Were they doing it because they just refused to sell their Bitcoin? Do they not have other assets? Now, the president came out last week and said that they found trillions of dollars worth of gold.
That's right.
But I can't believe that the IMF could put a deal together so quickly to lend them this based on the fact that they want the gold.
Right.
The supposed gold. So I just found that whole thing very interesting. And at a time where the timing of it all, where, again, so what do we have? What do we know about El Salvador? They sent all their criminals to the U.S., right? They emptied out their jails, sent them all up. That solved the criminal crisis. They made crypto mandatory, and now they need loans from the IMF, and the strings were, you have to make it not mandatory.
And get rid of your wallet, right? So
yeah, the government wallet, which was, I guess there's a bunch of wallets, but this wallet specifically sounded like the ArriveCan app. Like people had to go through this one wallet is the impression I got. Anyway, very interesting news. I just thought I'd throw that out there.
The timing is perfect. I think as we're looking at the MicroStrategy, this whole Ponzi loop, this image that came out, I don't know if you saw that, Jeremy, or not, but it is in essence how
did see
how
that.
the MicroStrategy has been using their company and using their
It's not a Ponzi.
volatility.
It's not a Ponzi in the sense that you need new investors, but it is a Ponzi in the sense of subprime loans. It works very similar to that. It's great to borrow against your property and buy the next.
Correct.
And do the same thing over and over again. But that's predicated. That's not technically a Ponzi. That's a loan strategy. But it depends on the market going in one direction. And if the market doesn't go in that direction, you're absolutely screwed.
And it depends on the reserve status and the collateral value.
Yeah, and he said, oh, you know, even if that happened, the people with the loans, you know, they don't lose their money. It's like, well, unless they call it quits.
Yeah,
right?
that's very true.
Like, yeah, I mean, technically, you're not gonna cash them out right then and there and say sorry you lost, because there's no end date on it. But
and this highlights,
it's just brutal that they're putting this guy on mainstream news, forcing people into this, telling people to sell their gold and buy Bitcoin. And that's the only reason we're talking about this subject right now, is because he laid down the gauntlet last week. He was the one saying you should sell your gold. And my problem with that, okay,
as a country strategy,
my problem with that, of throwing this guy on mainstream news, you don't have a counter to it. You never have a gold Bitcoin debate, right? The way we're talking about it. And if you have to tell someone that they should sell their gold to buy Bitcoin, that they should do this, they should do that, that comes off to me like I'll give you a donut for a vaccine. That comes off to me as I'd like you to like my video and subscribe.
or a hamburger.
Or a hamburger or fries. The fact is that if someone really wants to do something, they don't need convincing. They don't need
push.
you, Mr. Wizard, on TV telling us that we should just do what you say. And you know, I have to also say, I was listening to this interview with Pierre Lassonde, right? Massive billionaire. This is a good interview on Gold Telegraph. And he was saying he invested in penny stocks, mining penny stocks. And he made like 8 times his money.
Do people still do that?
Yeah, or you know, whatever. He made a ton of money off this, and he thought he was God's gift to investing. And then he did it again and lost all the money. But for that moment, he felt like he was the smartest guy on the planet.
Of course, for now.
For now.
Yeah. But this just really highlights.
Look, we don't ever talk about that for gold and silver. Gold and silver have been around for thousands of years. It's a physical commodity. It cannot drop to zero. I'm sure that there's meteorites, and I'm sure there's places on Earth where there's lots of gold. What's it cost to go and get it is the big question. Why are central banks buying gold, and why is it that the Joe public will eventually get into it? Is because it does not have a counterparty risk. It is real money. It is a store of value.
And what is counterparty? It's referring to the possibility that another party that you're depending on in this transaction may not fulfill their obligations as agreed. Is the collateral backing the bonds going to be there for it? Are the buyers for MicroStrategy going to be there? Are the buyers for this asset that you're investing going to be there? No. Chances are no. These things can potentially, and have been in the past, have gone to zero. This type of risk arises in many financial activities today. Loans, contracts, trades. It's all over the place. And if one party out of the many default, means that those dominoes start falling. That's what we're talking about, the dominoes. They're falling just to meet the obligations. And he who has the gold in this situation makes the rules. This is the reason why central banks around the world require, and it's in law. That's what Powell said. We can't change the laws to include Bitcoin as a reserve. He mentioned the law. And the law states, and according to the Constitution, that gold and silver are legal tender. So in an era where we're trying to become a little bit more independent and more self-reliant, we do this by owning physical precious metals.
And sometimes going back to the past is not a bad thing. You know, we have lots of traditions that we have had for thousands of years, and things that just are. Once you start naming them, they'll go on for marriage. You know,
There's one.
People have been coupling up for thousands of years. You can try to say, no, we've got a new version of that. But that's what's happened. That there's a history to this.
Yes.
Gold cannot be destroyed. It doesn't erode. It doesn't corrode. Silver is used in everything electronic, everything digital. You want to unleash technologies, you're going to need even more silver than you do today. What we have seen in the gold and silver market in the last 24 hours and the last couple weeks is nothing more than a psyop. It is nothing more than to make you not want to get involved in this market and say, I don't want to be involved. Because at the end of the day, most people buy when it's higher. People do not buy when it's lower. I know it shouldn't be the case. You would think if it's lower, that means low risk, lower cost, but that's just not how it goes. People want to buy when things are going on momentum. And you just have to see through that. You have to think, you just have to ride through this wave. Because again, the market is up 33 and 39% respectively in the Canadian dollar. And by the way, the market pulled off. I did a requote for someone today.
Yep. Because
of the exchange rate, both gold and silver are barely off at all. Mm-hmm. I did a requote for just an order for $20,000. And the difference over the last couple of weeks was a negligible $150, $200.
That's exactly
because of the exchange rate, which just goes to show you that what we are hedging here is the Canadian dollar and the devaluing of the Canadian dollar. If you think that the Canadian dollar is all of a sudden going to get stronger, I would say flip the channel. You don't need to be listening to this. But if you think that the Canadian dollar is that we're going to experience more inflation, we're going to experience a recession, that things are going to get worse before they get better, and even as they get better, you're still going to deal with inflation, you want to have some of this in the portfolio. The number, 18778-SILVER, the website, guildhallwealth.com. I want to remind our listeners that in the last year, gold is up 39.5% in Canadian dollars. In the last year, silver's up 33% in Canadian dollars. You want to hedge the devaluing of the Canadian dollar, you should be in physical gold and silver. Now, we might have some people that say, oh, you guys have been saying this for the last 10 years. And you know what? Gold and silver are up multiple hundreds of percent in that time. So if you have not participated in the market, then keep listening and keep saying that we're broken records. The reason why we are a broken record is because it is this show that told you shrinkflation was happening before anybody even noticed it. It was this show that talked about inflation when people thought it was a magical 2% when it was really 7%. We told you it was happening, and nobody started noticing it until after COVID. We talked about these issues. These issues haven't gone away. They've gotten worse. And even though things are going to get way, way better, really good. I mean, a gold-backed bond, Jerry? Do you know how good that would be for the gold market? We don't have to be doom and gloom. You want me to turn the doom and gloom off? We can turn the doom and gloom off. How about a gold-backed bond and what that would mean to the demand? But how about the industrial side of the market? You like your electric cars. You like your solar power. You want a stronger phone. You want computing power with AI to do all the work and come up with your emails and all of these things. Guess what?
Line up for the silver.
Line up for the silver. Line up for the mini nuclear plants that you're going to need to drive this business, okay? So
literally, yeah.
Doom side, happy side, you are going to need it. And listen, Jerry, tell them.
It's balance. It is balance in an imbalanced world. Yeah, we talk doom and gloom, but it's also the solution. The gold-backed bond is a solution, not to just our gold and silver portfolios, but it's for your portfolio as well, being fully diversified, because it's going to save the bond market. It's going to save the US dollar. It's going to save trade. It's going to provide liquidity. So it's not about doom and gloom. We're actually solutions focused, and it's not just, providing preservation of wealth all the time, and easily entering into a new financial landscape. It is one way to sidestep that for individuals and organizations to get away from the risk. But at the same time, you also want to position your wealth to grow it, because inflation hasn't gone away yet. You have to beat the inflation somehow, and gold and silver will be the proven way to do so. Despite short-term little pullbacks already, the gold price have already hit and recaptured the 100-day moving average, and everything looks healthy on the gold side. Now that you have the flush out, back to the Comex, back to what's been going on. Can't we see what's happening here? The powers that are forcing a monetary reset are in control of this. We know right now the bullion banks are controlling the U.S. paper ETFs in gold and silver to control that spot price, to control that price of gold and silver. Places like New York and London control the price, where they do no mining whatsoever. And there was an update from Rob Keynes. Bullion banks are about 8 times short gold as they are long. This is designed to suppress the price of gold. Keep you away. Don't look over here. And thereby triggering silver as well, off as well. And during a time in which Americans' purchasing power is being destroyed by inflation, this is criminal. But the Comex is assuming that their enemy is retail traders, but it's not. You're seeing right now, China is now using the Shanghai Gold Exchange to drain the Comex and the LBMA vaults of gold and silver, physical stuff, by offering an arbitrage deal on gold and silver. This is forcing the shorts, the very shorts, to get called, because physical delivery is being taken by the retail. The effect, gold and silver spot ETFs are losing control of that spot price. And this is a word of warning to the bullion banks. China is no retail player. They are a massive country. Russia is a massive country. And we need to follow suit. We need to follow what the trends are doing. And the reason why they have all of these dissuasions and distractions is to keep you out of the gold and silver market. Can you see how this will play out at the Comex? The very place that is 400 times the paper contract for only 1 physical ounce available, or every 100 paper contracts for gold, so you only have 1 ounce available.
So are they just trying to, we've talked about this, are they trying to just get onto the right side of the trade? This is why we see these types of volatility. Is this, again, trying to make sure that the Joe public doesn't get involved in that market? You can't take their money if it's in a hard asset like gold and silver. You need to get it from equities. You need to get it from other things. You need to get it from cash, right? That's how you can steal the wealth. You can't steal the wealth from a physical asset.
Exactly. And when the entities that are standing for delivery, looking for deliveries out of these exchanges, like we saw previously in London with the nickel debacle, they went into audit. Those bags of nickel were not nickel, Jeremy. They were bags of stone and dirt. This is the wool, the over our heads. They're trying to blind us with distractions. But meanwhile, when we want to take physical delivery, they're going to be drained soon, to the point where they'll be forced into the rule 589 rule of the Comex. What is that, you may ask? The Comex rule, this is what everyone should be so excited about with the price. If you're so focused on price versus the value, well, pay attention to this. The Comex rule 589, which entered into force on December 22nd, 2014. That's 10 years. Could be applied at any moment. Now, let's suppose the silver price is around $16, and at some point, no one will want to sell its physical silver. That's right. Who's selling their physical silver? Buyers will then be forced to raise the auction. After a rise of $3, the market will be stopped 2 minutes to let buyers and sellers negotiate. Then the market resumes. The auction goes up by $3, etc. When the threshold of $12 rise in the day will be reached without anyone wanting to sell physical, the market will be closed, and there will be no fixing for that day. Without a fixing, no one will be able to buy or sell silver in the world until the next fixing day. The second day, the silver market opens at $28. But nobody agrees to sell. Why would you want to sell when the price goes up, when they want it that badly?
Look how
Jeremy?
outdated this is. It just said silver at $28.
At $16, and we're past that. Who wants to sell a silver at that price? So as the day before, the price rises by $12, but there's no more fixing. In 2 weeks, 10 business days of trading, the silver will increase $16 plus $120 to $136. We're going to have fun. We're going to do the math ourselves. This is going to be multiplication due to default. These Comex, these entities that claim to have the silver, they're empty. and they're being emptied out by the day.
And in the next segment, let's talk about where the price could go. How does this market look like at the end?
Yep.
We're not just going to promise this forever and ever and ever. No, there is an end game here. Let's talk about that. How to know how to exit this market when it hits its peak. The number 18778 silver. The website guildhallwealth.com. If you want to buy some gold, silver, platinum at competitive prices, whether you're accumulating or gifting, we've got you covered. It's guildhallpreciousmetals.com. Remember, the TFSA limit for 2025 is $7,000. Let's get your kids out of the house. Let's get them into a first-time home savings account. We'll help you open the account. The limit for 2025 is going to be $8,000. And if you've been thinking about holding physical gold and silver in your portfolio, you gotta love the prices right now, and you've gotta love the promotion that we have now at Guildhall Wealth. Get your free gold. Go to getyourfreegold.com. You can get up to 10 grams of gold free in your registered account. We'll walk you through how to open the account, transfer from an existing institution if you need, and secure your wealth today. Secure your future, secure your family's future with some physical gold and physical silver. Jerry, how do people know when this market ends? Let's get them into the market and show them where this market is headed ultimately. Your thoughts on all this?
In line with Jim Rickards. Now, this is a time where we're seeing a huge financial system transition set up, and it's no wonder why veterans in the market are calling for gold prices to enter the $10,000 per ounce region for various reasons, whether it be revaluation, deliveries like this, the silver squeeze that I mentioned in the previous cycle because of the Comex Rule 589, where prices just will continue to higher because no one wants to sell. There's so many pistons at the goal right now that are firing up. The last piston that we focus on is gold's super cycle, and this also includes silver. Now, people don't know, but over the last 50 years, there's a 50-year chart. That's a very handsome chart, and it's a very trustworthy chart because we're not going back 5 minutes, 5 hours. No, we're going back 50 years, a pretty solid, trustworthy chart, I must say. But we are right now in the midst of a third super cycle for gold and with silver. We've had two previous cycles before, from 1970 to 1980, that's 10 years. From 2000 to 2010, another 10 years. And we are right now in the midst of a third, which began in 2016, when prices for gold hit a low of $1,050 per ounce. Now, in the past two super cycles, in those two previous decades, gold prices increased by an average of 1,435% over approximately 10 years. And now, according to Jim, if this gain is applied to gold's low of 1,050 that we hit, gold could potentially see around $15,000 per ounce by 2026. Now, if the silver to gold ratio reverts back to 30-1 silver to gold, the average, this price of silver would be approximately $500 per ounce. That's a staggering potential gain of 2,100% in a matter of a year. We're entering into 2025. If you're looking at your portfolio and you're looking to position safely to protect, to sidestep the financial madness, but you're also positioning into success. Because if you're looking at successfully eliminating your debts, if you have a mortgage, 2, 3 mortgages, and you can't get by, if you need to lower your debts, if you want to own a home, at the end of that first cycle from 1970 to 1980, all it took was 2,000 ounces of silver to buy a home. And now we're talking about a home in Toronto. We're not talking about moving way up north to Northwest Territories to afford your own home. No, we're talking about in the GTA. Today, 2 weeks ago, Jeremy, last week, the price of a 100-ounce bar was about $4,720. $4,720. Today it's $4,500. Silver's on sale. If you can get your hands on 2,000 ounces at $90,000, and we go up to,
well, I'm just doing the math right now at $40+ an ounce for a $1.5 million home. You need over 35,000 ounces. And I remember when I started, it was in the 20,000 range. So either real estate's overvalued or silver's undervalued, but definitely as that ratio comes down, the purchasing power of the silver is increasing significantly. And I think that as you start to see that ratio hit 35-1 like we did in 2011, or we start to see it move towards that 16-1 historic number, I think you're looking at the peak in the market. So we're not sitting here telling you this thing's going to go up forever. What we're saying is there are definite criteria you can look at, and price is the last thing. Price and profit percentages is the last thing. It's things like how many ounces of gold to buy the Dow, how many ounces of gold to buy a house, what's the gold silver ratio. There's all these certain things that you can look at that are based on weight, based on value, that have little to do with price.
Exactly. And if the $90,000 outlay today for your 2,000 ounces key to your real estate, and when we do finish off this cycle, if it rhymes or repeats and we do end up at a 30-1 ratio when gold hits 15,000, each ounce would be $500 an ounce. Multiplied by your 2,000 ounces, that's 1 million US. Converted into Canadian, you end up with 1.5 million. That's an average home in Toronto right now that we can see in our lifetime. No more wishing, no more chasing yield, no more crazy bets, no more all on black or all on red. We are doing it the smart way. We are doing it following the smart money.
And you'd know when to get out. It's not, you're going to hold this forever, now mortgage your home to buy it. Forget all that stuff.
We help you with that. We'll help you swap out. We'll even help you access liquidity without selling the assets, roll into gold, and live on the gains for the gold for the rest of your life without having to trigger tax implications. But this is it. We all want honesty. We all want, in a time where there's lack of trust everywhere, uncertainty everywhere, like Ron Paul said, because gold is honest money, it is disliked by honest men and women. This is the reason why
it's disliked by dishonest.
By dishonest men, correct. And you know what I love, a quote by Rick Santelli from MSNBC. We love Rick. If you trade in paper, the notion of many who trade gold, if the financial world comes to an end, they're going to have the gold. If you're playing in ETFs, you're going to have a piece of paper. That's what Rick Santelli said. You don't want to end off with a piece of paper. You want the asset in ounces.
The number 18778 silver and the website guildhallwealth.com. That's to hold physical gold and silver in your registered account. Go to the e-store Guildhall Precious Metals to pick up some physical gold and silver at competitive prices to get started, part of that crawl, walk, run strategy. And talk to us about holding physical gold and silver in a depository for ease of liquidity and making sure it's secure and insured. If you've missed a show, you can check us out on Rumble, check us out on YouTube, follow us on X. And that's it. Jerry, thank you so much. Thanks to all our listeners, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.